Hey guys, welcome back to Crypto in Action. If you are new to this channel, welcome. It's so nice to have you here. My name is Sarah, and on this channel I make videos on cryptocurrency. I teach you guys how to trade and invest in it. Okay, now in this video I want to show you guys how to long and short Bitcoin or any other cryptocurrency that exists in the market. Now, a lot of people don't know what it means to long and short Bitcoin. Most people, when it comes to like making money in cryptocurrency, they think that the only way you can make money from cryptocurrency is by buying it when the price is low and then selling it when the price is high. That is actually not the only way to make money from crypto. There are many different ways to make money from crypto, and one of the ways, okay, is actually trading it. Okay, leverage trading, and that is what I'm going to talk to you about in this video. Leverage trading, I believe, is actually one of the best ways to actually make money from crypto, because you have a higher chance of making a lot of money in a short period of time. Okay, so this is why I believe it's honestly one of the best ways compared to buying it when the price is low and then selling it when the price is high. That type of trading, it takes a long time. You have to like literally wait weeks or months or sometimes even years till you see your money increase. So what is leverage trading? Basically, leverage trading is when you are making prediction, okay, on the price of that cryptocurrency. Let's say, for example, Bitcoin. You can basically predict where you think Bitcoin is going. So, you know, Bitcoin, the price is very volatile, right? It goes up and down. Every single second, every single minute is just literally moving up and down. And you can actually take advantage of that to make money. So you can predict that, hey, I think the price is going to go up, and then you buy. When you buy the crypto, okay, when you buy Bitcoin, then when Bitcoin starts going up, then you start making money. You can also make money if Bitcoin is dropping. So basically, if you think that the price of Bitcoin is going to drop, then you can go ahead and sell it, and once the price starts dropping, then you start making money. This is amazing, guys. You know, I'm gonna teach you guys it, okay, so that you can start making money. And you honestly don't even need that much money to get started with futures trading, aka leverage trading. You don't need that much money. You can literally start with as little as $10. With as little as $10, you can get started with it, okay? And remember, there's the potential for you to make a lot of money with this type of trading. There is some risk to it, okay? I'm not gonna not say that, because yes, it is a bit risky, but I believe with the strategies that I'm going to share with you in this video, you're going to be able to learn how to manage those risks. Okay, so without wasting any more of your time, let's get right into it. I'm going to share with you guys my screen. If you enjoyed this video towards the end, make sure you give it a thumbs up and subscribe to the channel if you want to see more videos like this. All right, let's get started. I strongly believe that by the end of this video, you should know exactly how to long and short Bitcoin and any other cryptocurrency that you can trade in the market. Now, the first thing that you want to do is to open an account with one of these exchanges. So either Bybit or Binance. Okay, so these are the two exchanges that I have been using ever since I started trading. I've been trading on Bybit, and I also trade on Binance. So you can go ahead and open an account with one of them and get started right away. These two exchanges are very similar. They both allow you to be able to trade Bitcoin and a lot of many different cryptocurrency, okay? So, but for this tutorial, I'm going to focus on the Bybit exchange, okay? But just note that the steps that I'm going to walk you through here, it's similar to the one here on Binance, okay? So you have nothing to worry about. Let's get started. So once you go on Google, you type bybit.com, it will bring you to this page. Now, when you come to this page, obviously you need to create an account. You can just go and, sign up. And then once you sign up, then confirm your email and everything. Then once you do that, then you can go ahead and also deposit money. There's many different ways that Bybit offers you for you to deposit money into your account. So go and figure out how to do that. Okay, I'm not really going to focus about that in this video just because I don't want to make this video way too long. Okay, I just want to focus on the main objective, which is to show you how to long and short crypto. Okay, so yeah, once you've created your account and you've deposited your money and everything, now you are ready to go into the market. So now where do you do that? You see here at the top where it says derivatives. Okay, so I want you to hover on that, and then there's going to be a drop down menu here. Now on this drop down menu, you want to select USDT perpetual. When you touch that, you'll see here on the far right, there's another drop down menu. Now on this drop down menu, we're going to select BTC USDT. Okay, so you select that, and then it will bring you to this page here. Now, this is where the magic happens. This is basically where you make money. All right. So when you look at this screen here, it can be very intimidating just because there's just so many things that's happening here. There's like numbers, a bunch of buttons. And when you see this, you might just be like so confused and you don't know what the heck is happening. Hey, I was there when I started. I honestly, when I saw this, I just ran away. I immediately just closed my computer because I was like, nope, this is not for me. But no, I decided after a while, I decided to come back and actually learn what is happening here, and I actually understood it, and I realized that it actually wasn't that scary. Okay, so I'm going to explain to you exactly what is on this page here so you can understand, okay, because I know you are confused right now. So right now, the first thing I want you to look at is over here on the right side where it says buy long, sell short, okay? So these are the two positions you are able to take as a trader, okay? You can either buy long or you can sell short. Now, when you buy long, you're basically making the bet that you think the price is going up, okay? So when you buy long at a certain price, then you start making money only when the price starts moving up from your entry point, okay? I know some of you may not have understood what I just said, but I'm going to show you an example of what I mean, okay? So just so you know, buy long is basically for when you're predicting that the price is going up. And a sell short is basically for when you are predicting that the price is going down, okay? For sell short, you only start making money when the price starts dropping. And for buy long, you only start making money when the price starts going up, okay? Now, there are two ways that you can place your order. You can place your order through the limit over here, or you can place your order through market. Actually, there's a third way, which I'm not really going to go over. I'm just going to focus on the market and the limit here, okay? Now, what is limit here? Basically, when you place your order using limit, okay, this is like you're presetting your order. So with limit, your order doesn't open right away. What do I mean by that? Okay, let me walk you through a few examples. So let's say, for example, you're looking at the market, you're looking at it, and then, you believe that, the price is going to start dropping at a certain level. Okay, let's say Bitcoin right now is at 28,540. Okay, now you believe that when Bitcoin gets to say 30,000, okay, you believe when it gets to 30,000, that's when it's going to start dropping back down. So what you'll do is you'll come here and you pre-place your order. So the order price here, that is the price of Bitcoin. So you go ahead and put the price of Bitcoin 30,000, okay? And then order quantity, that is basically the number of Bitcoin you want to trade with. You want to trade with 1 Bitcoin, 2 Bitcoin, 3 Bitcoin, whatever it is, you put it here, okay? So you put the number of Bitcoin here, you put the Bitcoin price where you would like to enter your trade here on the order price section. When you put the number of Bitcoin that you would like to trade with, okay, you'll notice here at the bottom, it tells you how much you need to be able to trade with, okay? So to be able to trade with one Bitcoin, if I want to open a long position, the cost is 2,890. Okay, 2,889 actually. Okay, so that's the cost if I want to open a buy long position. When Bitcoin gets to 30,000 using one Bitcoin, that's how much I need to have in my wallet. Okay, now if I want to sell short, I need $3,000.37. Okay, that's how much I need to be able to short Bitcoin. I mean, to be able to short with one Bitcoin, that's how much I'm going to need. Okay, so now these numbers here at the bottom, like the amount that you need to trade with is going to vary depending on what leverage you're using. So these numbers here can actually either increase, okay, it can cost you more or less depending on the leverage that you're using, okay? So the leverage is here at the top here where I am hovering the mouse, okay? You'll see here right now I have the 10x. The leverage that I'm currently using is 10x, okay? And this is why it's controlling the price that I'm going to, I mean, it's controlling the cost that I'm going to need to be able to trade. But watch what happens if I change the leverage. So to change the leverage, I'm just going to click here, okay? And then I'm going to decrease it. Actually, no, let me increase it. Okay, let me use 50x instead. You see what happens. Okay, there you go. You see, I changed the leverage to 50x, and then look at what happened to the amount that I need to be able to short and long. Look at that. It decreased significantly, right? Now I only need 605 to be able to go long, or 636 to be able to go short. So leverage can decrease the amount of money that you need to be able to trade with. The higher leverage you use, the less money you need to be able to trade with, okay? So you can trade with a lot more Bitcoin for very little money, but the lower leverage that you use, okay? Let's say, let me put 2x, 2.8x, you see what happens. So with 2.8x, okay? To be able to trade with one Bitcoin using this type of leverage, 2.8x, I now need $10,000, 247, to be able to buy long. Look at that. It is a lot of money, right? This is because the leverage that I'm using is not that high. So basically what leverage does is that it's giving you money that you don't have. The exchange are basically lending you money that you don't have, okay? And then you can trade with that. Now, there are some risks, okay? There are some benefit to using high leverage, and there's also like some disadvantage to using high leverage. I will explain to you that in this video like later on, okay? But for now, I just want to focus on what limit and market is. So for limits, like I said, you place your order here, the future price where you like to enter, and then you put the quantity of how much Bitcoin you want to trade with, okay? Once you do that, then you can go ahead and either click buy long or sell short, okay? For this example, we're saying that when Bitcoin gets to 30,000, we want to short it because we believe that the price is going to start dropping from there, okay? So I'm going to just change the leverage. Let me just change it back to 10, and then I'll use less Bitcoin just because I don't have that much money in this account, okay? This account, I'm just using it for this video just to walk you guys through this. So I just have $27 here. So I actually can't trade with one Bitcoin. I can only trade with, let's see, 0.01. Actually, that's even too high. Okay, so 0.01. So I'll just use that. So I'm trading with 0.001 Bitcoin. Okay, I'll go ahead and click sell short. Now you'll see what happened. I hit confirm. Okay. All right. So I hit confirm. Now you see exactly what happened. Once I hit confirm, at the bottom here, you'll see my order has been placed. Okay, it's now in the current orders, the section that says current orders. That's where my order is. Now, when the price of Bitcoin gets to 30,000, right now it's at 28,740. When the price of Bitcoin gets to 30,000, that is when the exchange are going to automatically open my order. Okay, my trade is going to be live. And then when it goes live, it will go to position. This is where it's going to go. And then once the order is live, that's when I can immediately either start making money or losing money. I'll be able to just see how everything's happening. But for now, you know, I can't really lose money or I can't make money because the market, you know, the price of Bitcoin has not arrived to 30,000 yet. So yeah, so that's what limit allows you to do. Limit allows you to preset the order for the exchange to automatically open your position for you. This is beneficial for someone who literally doesn't have the time to be looking at the market literally every hour or every minute. You know, if you don't have the time, then limit is a perfect way for you to preset your order. You can literally be sleeping or be working, and you know the exchange will just automatically open your position for you. That's what limit does for you. Now with market is another way that you can open your position. Market allows you to actually enter the market right away. As soon as you click buy long or sell short, your trade will be open right away. It will move straight to position and you'll be able to start seeing how much money you're making or how much money you're losing. Okay, I'm going to show you a few examples here. Okay, let me just cancel this order that I just placed a few seconds ago. Okay, so that's been canceled. Now let's place a trade using market and you see what exactly happens. Okay, I'm still going to put here the quantity of Bitcoin that I'm going to be using. You know, I put it in this box here, 0.001. For the market, we don't need to put the price of Bitcoin because we're entering at the current market price. So we don't need to put the price of Bitcoin. We just put the number of Bitcoin that we'd like to be trading with. Okay, so I put it here 0.001 and then I go ahead. Let me see. I'm going to buy long. Okay, let me buy long. Let's see what happens. So I click buy long and then I hit confirm. Once I hit confirm, now my order is live. You see? So I went to position here at the bottom. You see my order is currently live. All right. And then we can see how much money I am making right now. Okay. To see that is right over, over here. So this is where I see unrealized P&L. This is basically my profits that I'm making. Currently, you can see the price is just fluctuating. When it is in green, I am in profit. When it is in red, I am in a loss. Okay. So currently I'm losing what, 1 cent, you know? So that's what you see. This is my order is now live. I am making money or I am losing money. Okay. So yeah, when you place your order here, there's a few things I want to go over here for you to understand. You can see all these things here. You see BTC USDT, that's basically the currency that I'm trading. Okay. And then quantity, that's the amount of Bitcoin I'm trading with. Okay. In this case, it's 0.001. And then the value of that amount is actually $28 USDT. Okay. That's the value. And then entry price. Basically, this is the price that I entered in. You know, as soon as I click buy, I entered right at this price here, 28,721. Okay. And then we also have the mark price. This is the current price that Bitcoin is at right now. Bitcoin is currently 28,638. You know, it's just moving up and down from there. And then we also have the lick price. This is known, this is for liquidation price. Okay. So basically, this price here, okay, this price here is when I can lose all my money. Basically, if the price is going against me by a lot, okay, since I opened a buy long position, this means that I can only start making money if Bitcoin goes above my entry point. So my entry point is 28,725, right? So I can only start making money if Bitcoin starts going higher than 28,721. If Bitcoin goes up to 28,722 or 28,723, you know, if it keeps going higher than this, that's when I actually start making money. Now, if Bitcoin starts going below my entry point, it starts dropping below my entry point, I'm actually going to be losing money if that happens. Okay, I'm actually going to be losing money. Now, the exchange have set a limit. Okay, they've come up with like a target price to when they themselves are going to completely close my position for me if the price goes against me by that much. So they've come up with this price here, 25,993. So this means that if Bitcoin drops all the way to 25,993, then I'm going to lose all of the money that I originally opened my position with, which right now is $2.88. Okay, that's how much I entered this trade with. So if the price drops to 25,993, then I'm definitely going to lose all of this money here. I'll lose it all. Okay, so that's what liquidation price is. Now, this liquidation price, the way they determine it is also based on the leverage that you're using. This is why leverage, you know, there's benefits to it and there's also disadvantage to it. Now, the risk with using high leverage is that it pushes this liquidation price closer to my entry price. So if I use leverage like, let's say 20x or 50x, my liquidation price now is going to be very, very tight to my entry price, which means that I could lose all my money very quick. You know, the price just has to move by very little in order for me to actually lose all of my money. That is the risk to using high leverage. But if I use a low leverage, you know, for me, low leverage, I consider it anything from 10x and lower. Okay, so from 10x and lower, that to me is considered low leverage, and this is the leverage that I usually recommend for new beginner traders, you know, to use. So 10x and lower is perfect. So with this type of leverage, I can literally be in the market for a long time. Like the price can go against me for a long time and I'm not going to lose all my money. So that's the benefits to using low leverage. Okay. And then over here, we have our position margin. This is basically the money that we use to trade with right now. Okay. And then over here, we have our unrealized P&L. Okay. So that's our either our profit and loss. You can see that right over here. And then the realized P&L, this is the profits that we've taken. And then TPSL, that's basically stands for take profit and stop loss. So you can set your take profit and stop loss over here. If you click on add, you can automatically set everything here. So what is your take profit? Basically, that is the price where you would like to exit the market and take the profit that you've made. Since I entered at 28,721, okay, based on the analysis that I did, let's say that I want to close my order, you know, I want to take my profit when the price gets to say 29,000. Okay, so I'll put here, let me go back. So I'll go here and then put 29,000 over here. Okay, so that's the price that I would like to get out of the trade and take the money that I've made. And then you'll see here at the bottom, it tells me how much exactly I'll be making. So it says here, your expected profit will be 27 cents. Okay, that's how much I'll be making if the price of Bitcoin gets to 29,000. Okay, and then my stop loss, this is the area that I want to close my position if the price is going against me. Okay, it's very important to set your stop loss because it will prevent you from losing a lot more money. So let's say I can see here, I am trading, I see that the price is just, I am in a loss, huge loss, you know, and the price just keeps going against me. I'm going to want to get out right away before. I don't want to wait till the price gets to my liquidation price for me to get out, because if I wait till the price gets to my liquidation price, then I'm going to end up losing all my money. I don't want to lose all my money, you know. I want to just take whatever loss I've accumulated right now. I want to just get out. So based on the analysis that I did, I'm going to come up with an area where I want to get out if the market goes against me. So I'll say, for example, I'll put here, I'll say when the price gets to say 28,600, for example. Okay. And yeah. So it tells me here my expected loss will be 12 cents. That's my expected loss. Okay. So I hit confirm. Let me put the profit here as well. Okay, I hit confirm and then boom, that's it. So right now, since I've set my stop loss and my take profit, everything is gonna now happen automatically. I don't need to check the market. I don't need to look at the chart to see what is happening. I can literally just close my computer and go on with my day, because now everything that happens is now left to the exchange. If the price goes to my take profit, then the exchange will automatically close my trade for me. And or if the price goes to my stop loss, then the exchange will automatically close my trade for me, and any profit or loss that I make from this trade will go to my wallet here. Okay, so this is the wallet here on the right side here. So if I lost money, then obviously this balance here will decrease by that amount that I lost, and if I made money, then this balance here will increase. Okay, so we've learned so far what does it mean to buy long and sell short. Okay, and then we've learned the two ways to place an order, through limit and market. Okay, and then we also learned about leverage. Okay, I taught you guys about the benefits of using leverage and the disadvantage of using leverage. Okay, there's benefits to using low leverage, and there's also benefits to using high leverage. However, the risk to using high leverage is way higher than the risk to using low leverage. So as someone who's just getting started, I would say stick to using a leverage of 10x and lower. Don't go above 10x, because you just put yourself at a lot of risk to lose all your money. Okay, so we learned about that. Now, the other thing I want you guys to learn is the cross and isolated. So, you know, when you click here, you see isolated. Okay, we click that. Always make sure that you are on the isolated version. Don't select cross, okay? Because with cross, you can lose all your money. If the market is going against you, you can lose all your money that's in your wallet. But with isolated, you're only going to lose the amount of money that you entered that trade with. Okay, so just make sure it's always in isolated. Hit confirm. And then the other thing that we're going to talk about is here. So on the far left side here, if you ever like want to trade a different crypto, you can do that right here. You can change it. So right now we have Bitcoin. So if I want to trade, let's say Ethereum, I just go here. I can see the list of all the crypto. Okay, I can just switch, and then you see now I am trading this, whatever this is. Okay, I can switch it to Ethereum. Okay, there's a lot of crypto here on Bybit that you can trade. Look at all that. Okay, but I recommend when you're just getting started, just focus on like trading 1 or 2 crypto. Okay, trading 1 or 2 crypto at a time, then you're good. Okay, let me just close this trade. Actually, that trade yeah, it closed. Wow. Yeah, actually, the price actually dropped. Okay, so this trade that I placed, this was just a random trade. Normally I would not even place a trade just like that. Before placing a trade, never ever, never do what I just did. Never just come and then randomly open, buy long or sell short. Hell to the no. That is very risky. You do that, you are going to lose all your money. Okay, before you come and either buy long or sell short, you want to create a trading plan. Okay, you want to go to trading view. You can actually analyze the chart here, but I recommend going on trading view. Okay, let's head to trading view. When you come to trading view here, This is where you're going to analyze the cryptocurrency that you would like to trade. I always recommend, first of all, have a trading plan, okay? And in your trading plan, basically, you want to come up with the place where you would like to open your trade and, you know, where you would like to enter, and then come up with a place where you like to take your profit, okay? That is to exit, and then come up with a place where you like to get out of the market if the price is going against you, okay? So you set your take profit, your stop loss, and your entry. Once you know those three things, okay, ahead of time, then you can go back to Bybit or Binance to open your trade. But if you don't know where you're going to enter or where you're going to take profit or where you're going to set your stop loss, don't enter a trade, because at that point you're just gambling. You just, you know, you're just going to lose money. So don't do that. So yeah, on TradingView here, this is where you can analyze any crypto you would like to trade. Okay, I'm not really gonna talk much about TradingView. You know, I'll just show you a little bit of it. So on the far right here, this is where you can choose the crypto that you like to trade. So for this example, I'm going to do Bitcoin. So most of the cryptocurrency here are written in acronyms. So you have to know all those acronyms. If you don't, you can just look them up online. So for Bitcoin, it is BTC, USDT. That's the pair that I am trading, okay? So when I type BTC, USDT, P, okay, since I'm trading leverage, I want to make sure I select P. Now, I'm going to see a few options here, you know. If these options here, you'll notice on the far right side, there's different exchanges, okay? There's Bigit, and BitGet, Bybit, OKX. So all these exchanges. So based on what exchange I'm going to be trading from, I have to select the chart for that exchange. So since I'm trading on Bybit, I want to make sure that I select the Bybit. Okay, select the Bybit chart here. So I click on that. Okay, I click on that. I'm actually going to focus on I'll focus on Binance here, just because on Bybit, I already have my chart open there. Okay, so I already have my chart open here. So yeah, I don't really want to go through it here, just because there's just so many things happening here in my chart. So I'm just going to focus on using the Binance version, okay? So let's look at Binance, because it's completely, yeah, almost empty, okay? So when you are analyzing the chart, you want to start out by analyzing the big time frame. Big time frames are known as anything from 1 month, 1 week, or 1 day, okay? So you start out by looking at the big time frames, okay? Let's say the monthly time frame. Whoa, I did not realize that my Binance chart is actually messy as well. Wow, this is bad. You know what? Let me go to a different exchange. So BTC, USDTP. Let's use Bidget, so BitGet. Okay, let's use this one because I've never analyzed on here. Okay, so look at this monthly time frame. When we are analyzing, two things to note: the price moves in trend. Okay, the price of crypto moves in trends. Those trends are uptrend. Okay, it will either move in uptrend, or it will move in a downtrend, or it will move in a sideways trend. Those are the three trends that the price moves in, okay? Now, the other thing to note is that the price always moves between support and resistance, okay? If you don't know what support and resistance is, then make sure to check out this video that I made that explains what support and resistance is. But just to keep it in short, support is basically the level where the price, when it is dropping, you know, eventually that price, it supports the price from bouncing back up, you know. So let me use, what example can I use for support? So let's use like this example right here. You see, when the price started dropping from here, it is dropping, and then once it got to this level, what happened? the price didn't continue dropping. It actually started bouncing back up from this level here. So this level, because the price was able to bounce back up from it here, you know, it created a lot of candles here, okay? This area would be known as a support. Okay, that's one support. So what you would do is you go ahead and get your trend line here on the left side, trend line, and then you draw your line here to mark that area down as support. Now, when you're drawing your trend line, okay, you want to make sure you extend it to the future, just because the price in the future, when it comes back to this place, just know that there's a chance it's gonna be able to respect that support. It's instead of the price to continue to drop lower, it's actually going to hold this support. So that's why you want to extend your trend line to the future to be able to see that. Okay, so that is support. So anytime the price comes near this trend line, what I would do as a trader, so I'm going to go to Bybit or Binance and open a buy long position, because whenever the price comes to the support, the expectation is that the price is going to bounce back up, okay? Because the support is helping the price to not drop lower. So what I want to do, because I'm expecting that the price is actually not going to drop lower, instead it's going to start bouncing back up, what I want to do is to open a buy long order, okay? I'll go ahead and buy long when the price comes to support. And now we have our one support here. The other thing we need to do is to draw resistance, okay? So resistance in this case, we can say right here, this will be known as resistance, okay? Now, what is resistance? Basically, resistance is the level that the price is struggling to move higher. So you can see here, when the price came here to where this yellow line is, okay, it dropped. Okay, it dropped. It came here a second time again. What happened? It actually dropped again. So because the price did that at least 2 times, okay, it did that 2 times, I'm going to go ahead and grab my trend line and mark that area down as resistance. Now, the way I would trade this is that whenever the price comes near this yellow line here, okay, aka this resistance, I'll go ahead, go to Bybit and open a sell short order, because the expectation is that when the price comes to resistance, it's actually going to start dropping, because resistance is preventing the price from moving higher, and support is supporting the price from dropping lower. So when the price comes to support, the price will bounce back up. When the price comes to resistance, the price will drop back down. So this is how you place your trade. You go ahead, buy long at support, and you sell short at resistance. So when you're analyzing the chart, you want to start up by looking at support and resistance. Draw out those support as resistance, as many as you can. There's a lot of them. There's another one right over here, okay? Yeah, so there's another one right over here that I'm gonna draw. And then that's it. I'm gonna leave that here. I mean, there's some here in the back as well. I could also draw them, but you know, I'm not really gonna draw them. I'm just gonna focus on this one, okay? And now once I've drawn the support and resistance, now I want to see, is there any like uptrend, you know, or downtrend line that I can draw, which the price has been forming, you know? If there isn't any, then move on to this another time frame to be able to find out. In this case here, I mean, I can see that there's downtrend here. So basically, how do you identify a downtrend? You know, when the price is forming lower lows and lower highs, you know, that is basically when the price is in a downtrend. So once the price is doing that and you are able to say connect 2 highs, okay, 2 lower highs together, if you're able to connect those 2 lower highs together, then you have yourself a nice downtrend. You can grab the trend line and just draw them like that, okay? And now the way you would trade this, let me make this a different color so that we can just know what's happening, okay? I'll make this, let me make this green, okay? Okay, so this green line here, that's our downtrend. So the way we would trade this, basically, this line here is acting as resistance for the price. So anytime the price comes to this green line, I'll go ahead and open a sell short order. Okay, I'll go to Bybit or Binance and open a sell short order. If the price comes to this green trend line, I sell short. Okay, and then write it all the way down. That's how you trade downtrend. When the price is in a downtrend, looking for selling opportunities. Okay, when the price is in a downtrend. And then the opposite is also true. When the price is in an uptrend, you're looking for buying opportunities. Okay, what I'm showing you right now is basically technical analysis. There's a lot more to it, but I'm just showing you guys, like, you know, the basic things that if you know them now, you'll be able to start building up on those skills, and then eventually, you know, you'll become a very good trader. Okay, so remember, support and resistance, that's how the price moves, and then it moves through trend line. Either it's in an uptrend or it's in a downtrend. Okay, and to identify a downtrend, just make sure you're able to see that the price is forming lower lows and lower highs. And once you see that, grab your trend line and see if you can connect two lower highs together. If you can connect two lower highs together, then you have yourself a trend line, and you can just extend the trend line to as long as you want. Okay, now the other way that you can trade a downtrend line, okay, is when the price breaks out of it. Okay, if the price, once the price ends up breaking out of a downward trend line, then that means that the trend, that downtrend, is about to end. So what you should now do is to actually start looking for buying opportunities, because since the price broke out of this downward trend line, now it's actually going to start moving up. So what you want to do is actually to buy. So you go on Binance or Bybit, and you go ahead and buy that crypto so that you can start making money. Okay, so that's the other way you can trade a downward trend line. When the price breaks out of it, you can go ahead long, but as long as the price remains below that trend line, okay, below that line, then you can go ahead and short, and only short it when the price comes near the trend line. Never short it when the price is away from it. Only short it when the price comes near, okay, it touches it, or at least it comes very close to it. You go ahead and short it, okay, and then you long it when the price breaks it. Okay, so we look at the monthly time frame, we analyze the support, the resistance, we analyze some trend lines. Okay, you can see here Bitcoin has recently broke this this downward trend line that it was in. Just look at it. Okay, it finally broke it, and that's why Bitcoin has been moving up. Okay, so now let's move down to the weekly time frame, and then we can zoom in. Okay, when I zoom in, you can see there's a lot more support and resistance that we can actually draw out. Where are a few? There's still the ones here in the back, which I'm not really gonna bother myself about. To be honest, yeah, to be honest, I don't really see like areas of significant support and resistance. Another thing to note is that when you're drawing support and resistance, make sure the levels that you're drawing those lines are, make sure that there's actually a lot of candlesticks that came near that area. So in this case, like, look at this one over here. We have one over here. The price bounced off from here. When it came again, it bounced off here. This is the third time. So in this case, if I notice that the price, let's say for this first one here, I notice that there's multiple candlesticks that actually supported the price here. You know, the price comes here and the price actually start bouncing back from it. If I see at least 3, 4, 5, 6 candlesticks, then I'll go ahead and draw that area as the support. But if I only see one candlestick or Yeah, just one. That's not enough proof. Okay, it's not enough proof for me to mark that area down as a support. Okay, so make sure you always, there's multiple candlesticks coming down to that area and then it's bouncing back up. If that happens, then you know that that area is actually a strong support. Okay, it can provide a stronger support for the price. Okay, and then the same thing for resistance. Just make sure there's a lot of candles coming near that level. And if there is, then you go ahead and mark the area down as support and resistance. Now, there's one thing I want to show you guys. When you're drawing support and resistance, you see how I am using lines, right? Normally, I wouldn't use lines. What I recommend you use is this rectangle here. So if you go on the far left here, you see over here, actually this one, yeah. So you select the rectangle, okay? So you want to draw your support and resistance actually using this rectangle. You don't want to use lines. So I'm going to delete this lines here. I'm going to explain to you why you want to use the rectangles instead of the lines. This is the reason. The price, as you may have noticed, okay, it actually has many different levels that it bounces up from. You can see right here. Look at that. When the price dropped here, it bounced back up. And then this time around, it didn't come all the way down here. It actually stopped here. So this is why you want to draw your support and resistance as levels, okay? So the way you would do it is you want to connect the lowest wick, okay? You connect the lowest wick. So wick is those skinny things at the bottom of the candlesticks. Those are known as wicks. So you connect the lowest one, okay? You connect that as the bottom part, and then you extend the top part to the two lowest body, okay? Two lowest candle that has like a full body. And yeah, so you connect it just like that. So there we have our zone. So if the price is around this zone, okay, as long as it remains above this purple box here, okay, then we can keep buying it. But once the price breaks below this purple box, in this case, you can see the moment the price broke below this purple box here, what happened? It started dropping, okay? And then, yeah, so you draw your support and resistance as ranges. Don't draw them as a single line. So for the resistance here, same thing. I'm going to draw it as a box here, okay? Put this box right here. Now remember the highest wick. So in this case, it's this one. And then two highest body, I would say this one over here. You know, so this is where I would put the resistance at. Okay. So all you're doing, you're basically doing this on all the time frame. Well, not all the time frame, maybe not the 1 minute or 30 seconds, but you're doing this on the monthly time frame, weekly time frame, daily time frame as well. Now you'll notice that the more you move towards the lower time frames, you'll be able to find a lot more support and resistance. Okay, right now I am looking at the daily time frame, and we can see there's a lot more support and resistance that I can actually draw out here. Okay, a lot more support and resistance. You can see that we have some support over here. It's because the price was bouncing, was holding that part a lot. It was holding there. So I get my rectangle, and then I draw the line. Okay, I draw the line right here. Okay, and then for resistance, we have another one over here. Okay, I draw the line. Okay, so once I draw this box, I can extend it all the way. Same thing with this one. You know, I can extend it all the way to the future because the price always will respect a support and resistance, okay? Especially the ones that you draw from like the monthly time frame, weekly time frame, daily time frame. The price is going to respect that support and resistance very, very much, okay? So you can see we have a perfect support and resistance here on the daily time frame. And you notice, how could you have traded this? You or I could have traded this like this. When the price came to this bottom part here, I will go ahead and open a buy long order. Okay, I'll place a buy long position, and then I'll set my stop loss. Okay, let's get into stop loss. When I enter a buy long here at the support, I set my stop loss right below this purple box. I'll set it right below here. Okay, and then my take profit, I'll set it anywhere below this purple box. I don't want it to come right exactly in this purple box, just because sometimes the price might not come all the way there. So I'll set my take profit right below that purple box. Okay, and then that's just how I would trade the market. I'll enter here, set my take profit over here, stop loss below there, and then enter buy long. When the price gets here, I get out, make money. And then if the price comes back down here again at the support here, I'll go ahead and open another buy long order. Now, when the price comes to this resistance, what I'm going to do is I'm going to get out of my long position, and I'm going to now open a sell short position. Okay, so I get out, open a sell short position, and now once I open that sell short position, I set my stop loss right above this resistance level here, and then I set my take profit anywhere near the support line here. Okay, that's how I would trade that. And then, yeah, so those are the two ways that I'm trading this range here, this support and resistance. Now, the other way I can trade this is when the price breaks this resistance. Okay, once the price breaks this resistance, the expectation is that the price is going to start moving higher. So what do? I go ahead and open a buy long position. I open a buy long position, and then I will set my take profit towards the next resistance that's in the price, which is around over here. This is where the next resistance is actually. So I'll enter here when the price breaks out and set my take profit here. My stop loss, I would set it below this line. So why am I setting my stop loss here? Because since the price broke above this resistance is now going to be used as support, which means that if the price ever drops back down here, I'm expecting it to actually hold. I'm expecting the price to hold this and not drop any lower. If it does drop lower, I know that I am in trouble and the price might continue to drop lower. So I want to get out so that I don't lose any more money, because if the price breaks back below the support, then it's going to continue dropping lower. And then if it does that, I'm going to lose a lot of money. So to prevent myself from losing a lot of money, I'm going to just end up getting out around here. So that's the other way you can open a long position once the price breaks the resistance. Now for a short position, you open it when the price actually breaks the support. Okay, remember I told you you can open a short when the price comes to the resistance. You can also open a sell short order when the price breaks the resistance. So when I see that the price breaks this resistance, then I'll go ahead and open a short order, and then I'll set my stop loss right above this support line. Since the price broke up below it, this support line now is going to be used as a resistance. So I'll set my stop loss right there, and then my take profit, I'll set it to the next support that's in the market. Since I can't really see it here, okay, obviously here you can see I can't really see where the next resistance is. So I would have to go to the bigger time frame. Okay, let's say to the weekly time frame to be able to see where the next support is. So I can see that, you know, the next support is actually, based on the past, is actually around over here. Okay, so that's at 12,000. If the price breaks this support line here, that is around 15,000, then I know the next support is like around over here. So I'll go ahead and set my take profit right here. Okay, Yeah, I hope you guys are enjoying this video so far. If you are enjoying it, make sure you hit the like button and subscribe to the channel. If you haven't yet, subscribe. I know this is a very long video, but I really want you guys to understand how to trade and how to long and short crypto, okay? So you can start making money, okay? So far you've learned a lot about, how to draw support and resistance. I sort of taught you guys about trend lines, but I want to dive deeper into that, okay? So let's move down into the 4-hour time frame so we can see a few trend lines that we can draw. Remember what I told you to identify, let's say an uptrend, you have to see the price forming higher highs and higher lows, okay? Once you see that, now you want to see if you can be able to connect two lows together, okay? So two higher lows together. If you can connect that, then you have yourself an upward trend line. We'll do this one over here. Okay, we can connect these two lows together right here. Okay. Here we go. Okay. So the moment I'm able to connect two lows together, okay, a lower low and a higher low, once I can connect those two together, then I can extend the trend line to as far as I want. Now, how I would trade this is like this. So this trend line here, okay, this green trend line is now acting as support for the price. Anytime the price comes to this trend line, I expect that it's going to go back up, okay? So how I would trade this, after I have drawn this trend line, after I've connected two lows together and I have extended it, now the third time that the price comes to this trend line, what I would do is I would long, okay? I would open a long order and then I would set my take profit right where the next resistance is, which is like around here. I'll set my take profit right there, or I could also set my take profit a little bit higher than this, because when the price is moving in an uptrend line like this, it's usually forming higher highs, okay? It's usually forming higher highs and higher lows. So because I know that, I am going to set my take profit higher than this previous lower high, okay? I'll set my take profit above this. So this would be like around, I'll say like around here or so. Okay, that's why I set my take profit. And if I longed right along this green trend line here, I'll go ahead and set my stop loss right below it. Okay, just in case, let's say if the price ends up breaking it, I want to get out, because once the price breaks and trend line, okay, breaks an upward trend line, the expectation is that the price is actually going to start dropping. So to prevent myself from losing any more money, I'll go ahead and close my order just to stay safe, okay? And yeah, and then usually once I close my order, I'll go ahead and open a short position. But I need to be careful not to do that right away, because sometimes there's false breakouts, okay? Sometimes the price will falsely break a trend line just to end up going back inside of it. So that's why when the price breaks upward trend line, you don't want to go ahead and short it right away. You want to see what you want to actually short it from when it retraces back, okay? I'll give you an example for when the price broke a trend line. Let's look at this example. So we can see here that when the price broke this green trend line, this upward trend line, what ended up happening is that the price actually ended up coming back near it to retest it. So what I would do is actually I would enter when the price is going back to retest it. When it's retesting it and it gets rejected, that is when I'll go ahead and open a short position. That is the only time. If it doesn't get rejected, if it just keeps forming bullish candles after bullish candles, I'm not going to go ahead and short it. I'm only going to short it after the price creates a bearish candle, which is showing me that it's getting rejected. So I'll short it and then yeah, just write it all the way. Usually the price tries to target the bottom of the trend line. That's usually where I would normally set my take profit. Sometimes it doesn't get there. So yeah, you have to figure out exactly where to set your take profit. I will usually figure out where the next support is So in this case, the next support would have been around this level here, okay, around this level. So this is where I would have taken my profit, at least my first take profit, and then the second one would have been at the bottom of this trend line where it began. Okay, so that's how you trade upward trend line, and there's a lot of it. This is just one of it that I showed you. I'm going to show you a couple more. Okay. Another area that we can draw as a upward trend line. I mean, we can draw this, but this is too steep. Okay, this is just way too steep. When you're drawing a trend line, you want to make sure it's kind of like this, you know, it's moving like a little bit sideways. You don't want the trend line to be moving up like this. This is like not very good of a trend line. But if it's moving sideways like this, then this is a very perfect trend line, okay? So let's see if I can find any more like this. There's a few here actually. So, okay, this one here. This is another good one that I can draw right here. Oops, it's not coming out. Okay, so I have some right here. Okay, I connected this low and this low together. And that's another trend line. I could have longed here, set my take profit here, and then you see the price broke it. This one is known as like a shorter trend line, okay? But if I was to go, say, on the 1 hour time frame, you'll see what happened. Okay. Now I'm on the 1 hour time frame. That same trend line, although it looks very tiny on the 4 hour time frame, when I come to the 1 hour time frame, that trend line actually looks a lot bigger, right? It looks a lot bigger. So the way I see it, trend lines, you're actually able to find a lot more trend lines when you come to the 1 hour time frame or the 30 minutes time frames or the 5 minute time frames. The price tends to form a lot of trend lines there. But when you go to like daily time frame, weekly time frame, or even monthly time frame, you usually don't really find that much trend line. Okay, so if you want to trade with trend lines, go and analyze the 1 hour time frame, the 30 minutes time frame, and 5 minute time frame. You will definitely find a lot of trend lines. Okay, so for this trend line, look at this. I'm going to draw it here. Okay, so I connected this low and this low together, and then we trade this. Remember, you long when the price comes here, and then you short when the price breaks it. Now look at this perfect example. Remember when I was telling you that sometimes the price will create false breakout? Okay, this is a perfect example of the price doing that. You see here, the price, when it broke out of this trend line, okay, what did it end up doing? The price actually ended up coming back into this trend line. Okay, so this shows that this was a false breakout, because usually if the price breaks a trend line, you expect it to go lower, but instead of the price going lower, it actually broke back in. Okay, so yeah, this is a perfect example of false breakout, and why it is important for you to set your stop loss, because this is exactly what could happen. But then eventually it actually ended up breaking it, and this time around, when it broke it, it came back to retest it. When it retested it, it actually got rejected. So this would have been a perfect time to actually short the price. So you short it, and then look at that. This would have been a really nice trade. Okay, perfect. So yeah, guys, this is basically it. When you're analyzing, look at support and resistance, first of all. And then once you look at support and resistance, look for any trend lines you can draw. Remember, you can find a lot of trend lines on the 1 hour time frame, 30 minutes time frame, and so on. Okay, you can find a lot of trend lines there. And then, yeah, so this is basically it. There's a lot more other things that you can learn to be able to help you to master technical analysis. Okay, I'm not going to go over them in this video just because it's going to make this video way too long, but there's like things like chart patterns, candlesticks patterns. Those are things that you can maybe start learning on your own, like doing some research to learn about them, because the price does create chart patterns that, yeah, that you can use to actually trade. And then there's also indicators that you can use that can help you to also figure out the best areas to buy long and sell short. Okay. But I usually don't recommend indicators as beginners. It's best to actually learn price action first, learn how the price moves between support and resistance and trend lines before going into indicators, because indicators sometimes can trick you because they're very slow, they lag a lot. So it's best to not really use them when you're just getting started. Okay, that's basically it. I don't think there's any more things I need to show you guys. Okay. Yeah, I hope you guys enjoyed this video. If you did, please give it a thumbs up. I truly appreciate it. And this is also going to help YouTube to actually show this video to more people so they can learn as well. Okay, so yeah, give this video a thumbs up. Subscribe to the channel if you want to learn more on how to trade and invest in cryptocurrency. Thank you guys for watching. I hope you have an amazing day.